Welcome to the program. Today we'll look at what's happening on the markets. We'll discuss the bank's reporting season. We'll have a look at Wesfarmers' recent sales result and we'll ask the question, should you take up the Rio buyback? I'm Marty Switzer.
I'm Paul Rickard.
And we're mad about money. Morning, Paul.
Morning, Marty.
So markets continue to run hard. We had a good night in the US last night. Australian markets, up very strongly over the past couple of weeks. Good numbers from Caterpillar and 3M. Does this rally continue?
Yeah, I think we're going to go up towards 6,000, Marty. I mean,
not far off, are we?
Yeah, yesterday was pretty good. I mean, despite some bearish leads, the market actually finished with a tiny little gain. So I think we're probably heading higher. Look, a lot of people have missed this rally, but there'll be some bit of profit taking coming. Don't have momentum yet to get through 6,000, but I think in the short term we have to follow the US. That's all that's happening here.
And how important is the currency for
Yeah,
our
well,
market
currency coming off is helping a little bit.
Yeah.
So we're down to 78 cents. I mean, it's probably not having a huge impact, but I think currency going up is a negative for our market. Currency coming down will be a positive longer term. So I actually see that more as a bullish sign than a bearish sign.
Okay, let's talk about the bank's reporting season. You've got ANZ tomorrow.
Yeah, ANZ kicks off tomorrow, Macquarie on Friday, and then we've got NAB and Westpac in the coming weeks. Look, really important, this is going to be one of their better reporting seasons because they're going to have positive net interest margin, bad debts are going to be low. The things to look for are still around positive jaws. That is revenue growth greater than growth in expenses.
Out,
Yep. I think there's going to be a lot of cost out. So there may not be any revenue growth, but a lot of the cost out could be higher. That's what I'm looking for places like ANZ. It's mainly a cost.
So you're not expecting top line growth from the
I'm not
banks?
expecting much top line growth. There'll be some simply because of the...
That's really been the story since the GFC.
Yeah, it has been the story, and I think it's going to continue. So banks are looking more and more at their cost. I think it's one of the reasons I like ANZ. I think it's taking the hardest line on its costs. We all know the problem about shrinking yourself to greatness, and that's the issue that ANZ is going to have to face up with. But I'm looking for ANZ to come out with a better result than the market expects tomorrow.
Okay.
But these should be good, and they could give a little bit more momentum to the market if the bank's results are okay.
Okay, let's move to the supermarkets. Wesfarmers have released a sales report this morning.
Yeah,
Good
quarterly.
numbers?
Well, it's okay. The market's probably going to go off a little bit on it. Their comparable store sales in food, which is the key number they're competing with Woolworths on, they're only up 0.3% for the quarter compared to the corresponding quarter last year. You recall in the last quarter, Woolworths was around about 3%. So this is a bit on the disappointing side. So still challenges with Coles. So Woolworths still leading Coles clearly in what's happening in the supermarket wars. The positive story here, Bunnings locally, just an absolute standout, and also not too bad results from Kmart and Officeworks.
So Wesfarmers or Woolworths at the moment?
Well, I'm still probably Wesfarmers simply because it's a lot cheaper. Market's still got a big premium on the Woolworths recovery story, and I think it's just going to be harder. But look, this is an okay report for Wesfarmers, not a brilliant one. The problem for Wesfarmers is twofold. One, Target's still a disaster, so big problem there. And their expansion to the UK, the jury's out on that. Negative sales in the UK. They're redesigning all the stores and doing what Australian companies do when they go to the UK. But jury, that's a real caution for me about Wesfarmers as to just how successful that's going to be.
Okay, before we go, Rio share buyback. You read an article in Super Report saying that, particularly for an SMSF, you should most definitely accept it.
Well, absolutely, a no-brainer for people in pension phase. Zero taxpayers, absolutely accept. People in accumulation, probably accept. The question you've got to ask yourself once you've accepted is, do you want to buy the shares back on market?
In light of the current issues that they've got.
Look,
that relates to previous management too,
I probably still think that I think it's still the right way to play these companies on a sort of an index neutral sense. I still think commodity prices are reasonably in sync because global growth is in sync. So I'm not sure I'd be underweight. I mean, the Rio is going to suffer with this stuff, but the market is pricing that stuff in. So my inclination is probably to buy back, but I can understand people saying you aren't going to get accepted for the full amount. You just get a proportion.
Commodity prices, you see them maintaining at current
levels? I think, oil seems pretty well supported at $50. Doesn't want to go down. Look, iron ore, we know there's some issues, with China clamping down on the, as they get into the winter, and so that's going to have a seasonal impact. But again, it's not coming off too much. So, global economies, are growing, and copper is up. That should be good long term for commodity prices, you'd expect.
Great, that's all I've got time for. Thanks, Paul. I'm Marty Switzer.
I'm Paul Rickard.
And we're mad about money.